Good morning, everyone. Today is December 6th, Friday. We're moving into the end of the year fairly quickly. Christmas trees are up, at least in my house. And we're trying to get through what looks to be a fairly volatile time period. And I did a couple of videos yesterday for you guys to check out. And we're rolling into kind of a topping pattern. SPY is up at 606.66, kind of an odd number as of the close yesterday. And what I'm going to tell you again is that we are still in that low volatility time frame. So I'm prepared for quite a bit of volatility and rotation over the next basically 3 weeks, maybe 4 weeks through the end of the year. I kind of think that we could be in for a surprise between now and really like January 8th, 9th, 10th, maybe even shortly shortly after that with the inauguration. So Excel is refusing to update again. So I'm going to just let that go for now. We're going to go ahead and let this update. Like I said, I don't think the prices here are all that exact. Again, it says 107.66 for the SPY. And, I guess yesterday you had to close 107. So here we are, folks, looking at a fairly solid uptrend. We're gotten up to about 108, which is a pretty high number, a little over 108. And we're moving into this Harami-Inside pattern in a carryover mode. A Harami-Inside pattern is typically an inside day, like I've drawn like this. Really kind of a typically a go nothing day. Now, it would typically be within yesterday's range, so I will move this up into this area. Actually, I'll redraw it. And essentially, a Harami pattern would be something like this within the range. Now, it could be wide highs and lows, but essentially closing within the range. Okay, that's what a Harami typically is. It's like an inside day. Now, we do have this gap window to pay attention to back over here. We've got a lot of little gaps, like this little gap over here. We have a gap over here. Doubt we're going to get a gap today. Probably going to be fairly mellow. We are seeing lighter volume, which is part of the low liquidity problem. We are seeing, some decreasing trends, particularly in the dollar down at 105, which is going to, hold up for metals, hopefully moving higher. And again, what we're kind of looking at is just a fairly quiet Friday, it looks like. QQQ would probably be the same thing, moving into a consolidated period, maybe something like this, moving into kind of a sideways mode. I don't expect too much going on. Remember, we have this gap here that we have to be aware of. We could potentially break down and close this gap over the next week or so. So be aware that we have this, kind of a range that we need to stay above. If we get below this gap, I think there's a pretty good chance we're going to come down and try to fill this little gap down here. And possibly this looks like a minor little gap right here, slightly. So we'll see how the market plays out. Yesterday I did that anomaly video talking about how the markets are fairly well overbought. And these are the charts that I used here. But we've got this rally phase on a daily mode, relatively overbought with the gap pattern here. We've got that island move here. So you can see how we went from a decrease kind of a pre-election island to this gapping island up here to this gapping island down here and then rallied through here. To be honest with you, this 582 area, this area pre-election seems like a basis range to me for the SPY. Now why? Kind of simple. It's kind of like the middle area of this move from where we were. You can see here if I come in here and do a Fibonacci coming up to this area, puts us right in the 25 area, the 025 area. And if I move this up to this level or to this level, now it puts us in the 382 level. So this range, I'm going to highlight it over here with a rectangle. It just seems to me that, this range pre-election is a basis level for the markets. I think that we are going to see more than likely some sort of a move back down into this 582 area, into this area, as a pullback before the inauguration or near the inauguration. Now, of course, I could be wrong. Okay, I'm not saying that I am perfect about this. Where was that other? That's that gap. And there was another one in here right there. That's the previous gap. And then we have this one, which is a big window going back further. The 7.5 area. Let me get rid of that. Okay, clean up the chart. So again, I urge traders to kind of stay cautious here. We are seeing rollover in the various sectors like XLK, starting to get a bit of a rollover after this big island move again. And you can kind of see these island trends, coming across here, here, here. And then we have a separate high zone running kind of across here and here. And these are gapping ranges. So this sets up a big gap area channeling upward. And I think we're probably going to get a breakdown here, rolling back down into that pre-election time frame, which is again going to be back over into this area. Now, I'm not saying it's going to happen overnight. What I'm saying is I do believe that we're going to be moving down into a consolidated reversion phase and hopefully building a base from there. I think really that this gapping is just unheard of. Now we can see there's been gapping before. Gap up, gap down, gap up, gap down, broke, gap down into these lower levels, gap here, rolling, gap here, rolling, gap up here, and then we get into this election gap, 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 and then gap. It makes sense to me that we're going to stall out, gap down, and roll back down into this lower support zone, potentially trying to find some support, especially if we get some sort of a breakdown in sectors. I believe XLF is going to be the sector to watch. And you can see how we're up near this upper channel very cleanly up above this upper channel here. It would make sense again to me that we're going to come down and potentially try to close this gap, moving into a downward channel into this area, and then basing and trying to rally out of it. So again, we could see it at 45, 46, ultimately 42, roughly 30 is deep support. Could we get this low? It all depends on what the event is and how it unfolds. So, I mean, I'm not discounting it, but I would say this is a higher probability, a 60 or 70% probability, and this may be a 20 or 30% probability. But again, the markets are overzealous after the Trump election. Yes, I think there's going to be a strong economy continuing, but I think that the markets have really overpriced expectation. There's going to, Trump's going to run into some battles in DC trying to get things done. And I think it's going to be a matter of, you know, government functioning the way it's supposed to function and checks and balances. So I think it's going to be a little slower than everybody thinks, these dramatic changes. Okay, gold and silver. Gold rolled down into and below support at roughly 26.45, but then rallied back up out of it. The weaker dollar is going to play into a potential gold move higher. Silver needs to really make a move up above this 32 to 32.50 area. Love to see silver make a move up into this upper channel here. Get rid of some of these lines. So again, we are really trying to see silver make a move up into this 32.50, taking out new highs, and then back up here into this 33 area. Until we get silver moving out of this area here, we're still consolidating. Okay, and you can see we've got this nice solid trend that I highlighted a while ago, this one. And we looks like we've got a little bit of a breakaway taking place here, but we're right at the apex. Right here is the apex. So I would expect some volatility before we get a big move. Okay. Gold has run through this big rally. This flagging formation, this big recovery rally. We would likely need to see the dollar continue to weaken for gold to continue to move higher. I do believe gold will try to push higher. We are seeing this consolidation. I think it's really, a balance here of metals not reacting simply because the exuberance in the other markets. And I think once the markets start to settle, I think gold and silver are really going to start to take off. So we've got this flagging. Now we've got kind of an extended flagging coming across here. And of course, we can run right across this area here if we want. Or we could try to come off of this area down here and run across here. Either way, what we're looking at here, guys, is another potential apexing pattern right over here, right around December 10th. That's where my anomaly pattern is supposed to be the deepest, potentially. I expected the secondary bottom to happen in the SPY right around December 10th through 15th. So if that's the case, and we do get that bottom in the SPY over here around the 10th or the 15th, that would put us right here, roughly. That would be our secondary bottom, roughly. We may be rolling down into this bottom around the 15th or so. Okay. Okay, so gold and silver are really kind of trapped in this flagging formation. We need to see how it plays out. If I do a simple count here, this pattern is played out. We've rolled back up here, rolled back down through volatility. So you'd have A, B, but would be looking at here for gold would be an A, B, C, D, E type of pattern. With volatility getting pretty explosive in this area. And again, same kind of a scenario here. We've got this flagging formation downward. So I could come over here and kind of flag this downward and use this as the upper channel or the lower channel. And in that case, we would have the A, B, C, D, E potentially breaking out to the upside with volatility coming up. And this is a 2-hour chart. So we may see some volatility in silver today. We may see some big volatility next week. And with the gold cycle patterns right here, we're looking at a reversal rally in counter trend mode. We are in bullish trending. We are expanding in gold. Remember, this is yesterday's because the Excel file's not updating prices. They've had problems with this for about a week and a half. So they're doing something to fix it. Anyway, long and short of it, the reversal rally in counter trend mode would indicate looking at where we're at and moving in a counter trend type of a mode. So a little concern of the pullback, but I think we had the pullback yesterday with this low over here and this low over here in silver. That's why I think we're kind of looking at a a pretty solid potential upward trend today. And I believe we will be seeing fairly solid, moderate upward rotation, meaning I would expect to see gold potentially up in this. Let me get the drawing. I would expect to see gold back up into this 2680 potentially today. And I would expect to see silver up here in this 3190, 32 area today. So again, I think we're going to get a little bit of a move to the upside in metals today. Nothing huge. 20 bucks, 25 bucks in gold, maybe 40, 50 cents in silver. I think that reversal rally is going to play out through this volatility. We'll see how it plays out. And of course, I would hate to see us get even deeper, but we could. This is rejection off of this low. I think this holds, and we'll see if we get rejection off of this low continuing through here. That's this red line right here. Lastly, we'll go to Bitcoin, and Bitcoin is back below 100,000. It got there, it peaked, it targeted, and it rolled downward. You can see how we've got this channel. Let me go to daily. So here was our flagging channel. Here was our spike. Huge volatility yesterday. Big spike. In fact, let's take a look at that. That's wild. I mean, oh my gosh, 103,000 is the high and 92,000 is the low. That's 10,000, $11,000 range in a day. Man, oh man, oh man. Yeah, look at that low. Look at that low right there. Wow. Okay, so what happens when you get a low like this is you're getting selling pressure showing. So the way you look at this is real simple. You're getting selling pressure saying that, hey, the sellers were able to really collapse the market, but they were unable to hold the market down here. So buyers came back in and drove price back up, which is why I call this rejection. This is clear rejection. Okay, you can see rejection right here. You can see rejection right here, minor. You can see secondary rejection right here. You can come down and see rejection right here. I mean, you can count it everywhere. Every time you get a little reversal, that's minor rejection right there. Minor rejection right there. And it plays into price structure. So when you see a rejection point get some sort of confirmation with a secondary lower rejection point, that gives you some confirmation. When you get a rejection point here that gets into a secondary point and then a third higher, that again, it's confirmation of an uptrend. This is consolidating while this is moving higher. This is flagging essentially right through here. And remember, price only does two things. It either trends or it flags. So understand that we're really looking at trending or flagging. So when we take a look at this, okay, we're moving into this is on an hourly chart. So we can come here and we can see we've had a very solid upward rally. Let me get rid of these little rejection marks here. Okay, well, we'll get rid of this, I guess. And that. And now What do you see that I see? Very deep low, testing out this rejection point. We can find rejection areas back over here that align with this low. But I also see a very clean move up, pull back. Let me draw that again. Move up, pull back into a potential flagging formation. And that would be the start of a potential excess phase peak pattern. That would mean that we are currently in a flagging upward trend in Bitcoin, looking for that breakdown, and that breakdown would have to come down below this low to break out. If it happens, and again, this is it, if it happens, we're going to be moving down to, wow, look at this. That might have been me marking it, probably. Yeah, it's probably marking back over here. 358 and high. Yeah, it looks like right on. No, that's not it. Anyway, interesting that I wrote that number there, so I'll just leave it be for now. But again, if we get this breakdown, if this excess peak phase pattern plays out, given where we're at and given this kind of a breakdown, we could then see a secondary move here. It's got to get below this, down into consolidation, and then potentially down into the ultimate low. So look at this range setting up this deep, deep low. This, if this plays out and it rolls down, this would be our one peak. This would be our two flagging. This would be our three breakdown right here. This would be our four consolidation, and this would ultimately be our five breakdown low. And the consolidation pattern would be across here. If this were to play out, this would be a big unwinding for Bitcoin. I mean, but it shows that the size of this peak and this flag right now, and you can almost see the flag originates back here and kind of comes across these highs and back here across these lows. So I'll make this dark 2, dark 2. So you can see that flagging plays right out into the rolling pattern here. The rolling sideways pattern. And I think we're looking at this channel right here as the flagging channel carrying upward. Really, really in this area, guys. There's our flagging. Little wide, I'll shrink it up, but there's our flagging. And I think that's going to continue until we break. So we are technically in a moderate uptrend. And we are flagging through this excess phase peak pattern in Bitcoin. So you have a moderate uptrend still. You would want to trade probably smaller quantities. We don't know how high it could go. I mean, technically, it could go all the way up to here. So if it stays in this channel, it could go all the way up and rally itself right on out of this high, breaking to new all-time highs, which is a possibility. That's an invalidation of this breakdown. So that is a possibility. If this breakdown comes into play, which is right now the predominant cycle event, then we're going to be looking at a rolling breakdown here at some point in the future, trying to get down below these levels. And we really do need to watch this rejection point. This would kind of be a very big area right here, this rejection point. And then again, we have these lower rejection points down here. Each one of these is like breaking through a floor and moving downward. So we have a lot of work here. But boy, oh boy, is this interesting. Now, a collapse in Bitcoin, really a rejection up here at 100,000, 103,000 would be a very big thing. Okay, if Bitcoin were to fall down to 80 grand after reaching 100 grand, that's a 22% collapse. If it were to fall down to say 75,000, that's a 25, percent collapse. And am I saying that's possible? Yeah, I mean, it could happen. It would unwind literally everything that's gone on over the last, couple of months in Bitcoin. You're talking about, potentially unwinding back down to this 72, 68, 66 to $72,000 area. Is that unusual? Uh, maybe not. I mean, I see Bitcoin as being a very unique hedge play, but I also see it fraught with risk. And anything that can roll, uh, you know, $11,000 in a day, or like you see here, this is up from 80 to 88. I mean, these are big moves. This is speculative trading at best. It's kind of like, I don't know how to say it. It's based on emotion, and there are fundamentals behind it, but it's based a lot on emotion. And because of that, you're going to get some very big moves. And all it's going to take is a broad sector move to say, hey, this is overdone. This is overcooked. We can come back over here. Like hypothetically, this is daily. So we come back over here and try to look at, a normalized range. Let's take a look at here, linear regression. Let's pick a moderate bull cycle to a moderate bull cycle over here. And there is our channel. Okay. And where does that put us at? That's just picking a couple of areas. That's all it is, guys. I'm picking a moderate bull cycle to like a moderate bull cycle over here. And where does that put us in a grand scheme of price range? Somewhere between hypothetically 69,000 and 83,000, right in this area as a potential reversion area. So I would be, again, pretty cautious of a broad unwinding and not necessarily preparing for it, but being aware that we could get this moderately big breakdown down into the 82 to maybe 72 to 75,000 area, looking for support down here in these areas. It's not unimaginable, is what I'm trying to say. Okay, I think I'm going to leave it there. Back to the SPY, and let's work on trying to play safe today. Remember, the markets are going to be rolling, I think, and there's a pretty strong chance we could get an anomaly mode. Like I said, I just have a feeling that we're going to get some kind of surprise out of Washington, D.C., and we will see what happens. Okay, happy Friday, guys. Go get some.